this is actually one of the most important, I think, like concepts to understand. And this is basically the split of conversion rates from prospect to close between a VC and an angel. So if you think about a VC, right, you need 160 VCs in terms of like reaching out email to get one close, right? So imagine you have 160 emails, you send out an email, 1 in 10 VCs replies, right? So then you have 16 first meetings. From the 16 meetings, you get to the second meeting, which is often also related to investment committee. So that leaves you with four parties still in the game. And then from there to start doing due diligence, and then ultimately one investor gives you money, right? That's basically a 1 to 160 ratio. Equally, when you go to an angel, well, you reach out to 16 angels, 4 will pick up the phone, right? Because they don't get flooded by a million different decks every day, and they do much, much smaller tickets as well. They don't have an investment committee because they don't have partners above them. They don't have LPs who gave them money who require an investment committee. And ultimately, they do the due diligence, assuming the same ratio. So let's say out of 2 angels, 1 gives you the money after due diligence, you get to that one close. So that's actually 1 to 16, which is 10 times less. That means if you're starting to fundraise, you almost want to get, let's say you can have 10 angels for the same amount of work as 1 VC. And if you then say, okay, well, 10 angels wire me, let's say 50K, that's your 500K round. So how to think about it, and I go into kind of fundraising personas in a second, but think about it in this way, right? Like you can have a total round and you can go to angels first, fill up half of the round, or like a third of the round, then go to a family office or a VC who does like follow-ons, a small VC, and then you go to your lead VC, right? And because you have already 10 angels who gave you that 50K check or 20 to 30K check, you already have leverage, you already have momentum. And that will make it so much easier for you to then go out to VCs and talk to VCs. So now going back to this slide, so this is why it's so important to understand, like there are so many angels and there's so many angels who really want to do private deals and want to be part of the venture capital kind of ecosystem. They want to invest in startups. And so it's really, really easy to build up leverage, build up momentum by going out to angels, and then afterwards go to VCs.